Happy Sunday. Today's topic is enterprise valuation. So if you're still wondering if market capitalization is the best way to value your companies, you're making a huge mistake. All right. Smart investors use a better metric called enterprise value. All right. And today we're going to show you all about enterprise value, why it's the better metric to use when evaluating companies. So tune on in and we'll get right to it. Good morning, gentlemen. How y'all doing today? By the way, welcome to the Black Wolf Rebels Sunday Money Church. I forgot all about that, by the way.
It's all good, man.
What kind of pastor are you? You don't talk about the church, bro.
Neil, good morning, everybody. For those watching live, and also for those watching the replay, and everybody in the village, man. Good morning. It's Sunday, so I got the hoodie on, shadowy super coater hoodie, as I call it.
Yeah, I took my hoodie mellow. I took the Black Air Force Energy.
Yeah, Corey had to take the Black Air Force Energy somewhere, but no, everything's good, man.
I was on Black Air Force Energy.
This is true. Corey don't even need
I don't need the hoodie for the energy, but
no, he really doesn't. No, but it's a beautiful morning. Whoa. Shout out to Carlos, man. Carlos just sent a donation to the church. Carlos has sent the Cash App in. Salute, Carlos. I just want you to know I got it. You know, everybody know YouTube is the ops, right? So YouTube is the ops on the bottom hood side. Now, my brother Kamari, he still placates YouTube. He ain't as rebellious.
But guess what?
The ops still cutting checks.
Listen, man.
We are sending those checks directly to the village. Matter of fact, I gotta send Jimmy the money for.
I wasn't gonna say nothing. I was gonna wait till you figured it out. You know what I'm saying? I ain't sweating you about no bread. But
I forgot. But listen, it's all going together.
Yes. Listen. Black Wealth Rebels is a combination of the Finance Rebel and By the Hood. So we are one. We are Voltron. But what I will say is this though. I want to salute Carlos and everybody that understands what's going on. So we got donations. It's like a real church though, right? I ain't even had to pass the plate around. Shout out to Carlos, man. And by the way, Carlos is also a master trader. Carlos be in the group trading with us during the course of the week. We be rumbling Spy, who's the other ops.
Shout out to Carlos.
So shout out to Carlos, man. Faith is in the building. Shout out to Faith. Shout out to everybody who's watching us live, man. But we're going to talk about enterprise value today. Because again, on Sundays, it's our Sunday church. We've been doing classes and we're building upon this, right? So, it's options, but it's also long-term investing. Later in the day, we'll also have a video out with our plays of the week. That'll be behind the village. So if you're in the village, you'll get that a little bit later. But this morning, we definitely want to talk about enterprise value because, we're talking about investing and trading and business, and that's what we do. Amongst other things that we talk about. Shout out to everybody who was on our Friday show that kind of went off the rails. We started our Friday show talking about
condom.
Yeah, our Friday show, I don't even know what we started talking about, but it ended up all over the place. But that's what we do on Friday. So we had a ball on Friday and everybody was there. Salute to you. And we gave away over $100 in Bitcoin on Friday too. So if you're not there on Fridays, you got to pull up. We do giveaways every Friday and, we try to put the money in the pockets of the people,
We top to the top, y'all. That's
Yes, the rhythm, the rebel. All right, so with that being said, I got my slide deck ready. Let me put it up here, and whenever you gentlemen are ready to go, I'll get right into enterprise value and my explanation of such. You got
let them hands go.
All right, man. So listen, we know how we do this. It's like the LOX, man. I'm gonna start it off, and when you brothers want to chime in, you chime in. This section of this morning show will be cut out and put behind the village, exclusively as the slide deck. So, for those in the village, and by the way, if you're not in the village, please join the village, which is blackwealthrebels.com. It's important to join the village because we have content back there that's, free. We do have paid content as well. We're not trying to sell you anything, but the reason it's important to join the village is because these platforms, be doing us crazy. A lot of platforms will suppress us or demonetize us strictly for using the term black wealth. And how do I know? Because I've been told that by the platforms. I'm like, how is black wealth a derogatory term?
Because it's not white wealth. That's why.
I'm just saying, I tried to run an ad one time and they told me I couldn't use the term black wealth. And I'm like, what is wrong with the term black wealth?
Call a thing a thing.
So I say all that to say, make sure you're in the village because that way we always have access to, to our folks, in case they just one day wake up and say, we're kicking y'all off altogether. We still got a way to communicate with our people, man. So join the village, that's blackwealthrebels.com. That will be mucho apreciato. But we're going to get into this. Side note, one last thing. Kamari, I sent you a text yesterday because you are a podcast, brother. I don't know if you got my text or looked at it. I sent you this podcast. I'm going to share it with everybody. I know Corey don't really bang with podcasts, so I ain't even bothering with it. But
I saw it. I didn't get a chance to look at it yet.
So the show that used to be called Business Wars, they kind of rebranded, right? They're called Business Movers now, right? I don't know if
I gotta watch that because I like Business Wars.
All right, so I don't know if the word war was kind of a derogatory term or what was going on with the term war, but anyway, the newest series they have on there is actually Madam C.J. Walker versus Annie Turnbull.
Get the fuck out of here.
Yeah, they actually made it to Business Wars or Business Movers. Wow. They made it there, bro. So that was phenomenal. By the way, and I'm listening to it. It's amazing, bro. It's 3 episodes so far. I think it's gonna be a 4-episode series, but it's 3 hours.
I feel about that though.
That's a good point. That's also a good point. And what I will say is this: for anybody who's listened to or read Black Fortunes, and you felt like that Madam CJ was a piece of work, this ain't gonna help. This might be worse. How she did Annie Turnbull was straight dirty, dog. Like according to this, right?
Oh, she did her dirty. I mean, that's in Black Fortunes.
No, super dirty, dog. Super dirty. Like because this one is reenactment. So, dog. When they do their reenactments, they take it from the text, and they'll tell you the text that they're taking it from. So there's a couple textbooks that they took it from, but. Yeah, if Black Fortunes bothered you in terms of how she did Annie Turnbull, maybe you don't want to listen to this. But if it's still phenomenal. So I want to put that out there. Look up Business Movers podcast. I'm not a hater, and it's Annie Turnbull.
We got to review it.
Yeah, man. But you got to listen to it first. But I listened to all 3 episodes, dog. That's how enthralled I was. But
say less.
Let's get to it. All right, so let's get to enterprise value. Let's talk about. Shout out to Shelby who's in the building. You know, Shelby's also a member of the village and someone who trades with us. So I want to send him a shout out. But this morning, we're talking about understanding enterprise value, a comprehensive guide. So we're going to explore enterprise value as a fundamental financial metric. We'll talk about calculation, application, and why it provides a more accurate picture of a company's worth compared to market cap, which we covered last week. Last week, we did a whole presentation on market cap. So we're going to, kind of compare and contrast and talk about why enterprise value may have more value to you as an investor or a trader. Shout out to JT Coin Rings. I see you just pulled up. And JT Coin Rings is also a member of the village, so salute to him. You know what I mean? Like, our village does pull up. But let's keep it moving though. So we're going to talk about enterprise value. So what is enterprise value? Right? It's the total value, but it encompasses equity, debt, and cash. And it reflects the actual cost of buying a company, right? So every week when we come on these classes, and I'm going to hammer this home no matter how many classes we have, pause. And there's Carlos right there. Carlos, we just gave you a shout out. We, appreciate it. I want you to know I got the Cash App. Salute for the church donation. You know what I'm saying? We got to put it to the church fund to build up, new windows and however they say in church.
The building fund.
The building fund. Yeah, you got to go to the building fund. But anyway, man, hey, listen, Jarrell, we try to be consistent, beloved. Like, we about the people, man. And salute to Jarrell too, man. We about the people though. But it reflects the actual cost of buying a company. And what I was saying is that every week when I come on here, no matter what the topic is or what specific area we're talking about as it pertains to finance, investing, or trading, I always repeat that when you buy a stock or you buy the option to control a stock, we're talking about a company. Because I think it's that important, because I think that is one of the biggest things that's missing when I'm in the streets talking to people about stocks or the stock market. They look at it as being this esoteric just number that's out there, not understanding what it represents. And the reason that's important when talking about enterprise value is because even if you buy 10 shares or 1 share or 5 shares, you're talking about ownership of a company. And I feel like if you wouldn't buy a company outright, right? If I give you the books of this company and you say, nah, I wouldn't buy this outright, you probably shouldn't be buying 10 shares or 5 shares, right? And how do you? Would you say, Kamari?
Or any options from it.
Or any options from it, right? That's absolutely true. Specifically, if you're buying call options. Now, I say that to say this. You want to know what the total value of that enterprise is and to see how good that company is at managing the money. Because like I mentioned last week, even with market cap, when you put money into a company, one of the things that you're doing is you're trusting management, with your money, because their objective is to create value for the shareholder. You are a shareholder. I don't care if you got $10 of equity that you got on Cash App. Guess what? You're still a shareholder. You know what I mean? I'll be walking around with some of these companies. Well, I don't even own a bunch of companies, but the companies that I do own, I walk around and act like, like I got 10 million shares, you know what I'm saying? Because that's how I feel and that's how I study my companies. But acquisition cost is rather important in my perspective, because outside of just what the stock is worth, what is the actual company worth, right? So market cap talks about what the stock is worth in the grand scheme of things. What is the actual company worth? So let's move on and talk a little bit more about what makes this up. So here's the formula. We talk about enterprise value. We have the market cap, which is the value of the outstanding shares, like we talked about last week. But we also have to include debt and cash equivalents, right? So the debt includes short-term and long-term debt. The cash and cash equivalents are all liquid assets, which reduce your acquisition costs. So why is this important? Debt to me is very important. There are a lot of companies that make money, but they run high debt in order to make said money. So then I start to wonder, okay, are you even worth what you purport to be worth if you're carrying all that debt? I like to simplify things, right? So, in your personal finance, even if you have $3 million in assets, if you have $4 million in debt, how good are you really doing, right? I know everyone hates the Orange Man, right? But I remember reading his book before everyone hated the Orange Man. And he had an interesting little passage in his book at one time. What was the name of the Orange Man's book? This was years ago. This is back when he was
Art of the Deal.
Yeah, Art of the Deal. Yeah, that was it. Look, Kamari read it too. So that was back when everyone in hip hop loved dude, and before everybody hated him, right? But it was a passage in a book, and he was talking about owning all these beautiful buildings in New York City, and he was walking down the street with his daughter, and he told his daughter, he was pointing at a homeless man, and he was like, "This guy is probably worth more than I am." And she was like, "Well, what do you mean? You got all these buildings?" He was like, "Yeah, but I got debt on everything." He said, "I'm underwater on most of these buildings. So this dude who seemingly has nothing is probably worth more than me," right? Now, I use that to say that debt is important. It's one of the reasons that Dave Ramsey resonates with so many people, is because he screams about getting rid of debt. But to me, there's a difference between debt and leverage, because if you look at some of the biggest companies in the world, they carry debt, but they're using that debt to then make more money. It's why, like in some of the real estate videos that are behind the village, I say that it's a difference between just borrowing to go buy food and belts and clothes versus borrowing to make more money, right? We call that leverage, which is a little bit different than debt. So you want to look at how the companies are using the debt. It's not that they have debt and just having debt is bad. It's what are you doing with the debt? Are you just carrying debt on your books for the sake of carrying debt, or are you using debt to make money? And the thing about publicly traded companies is we have access to a lot of information. Go ahead, Kamari. Say what you're going to say.
No, I was going to ask you, so do you not think all this business funding is good? Everybody is on social media talking about business funding. I mean, I find that super duper hilarious.
No, go ahead and give your perspective on that. Let me I got a quick phone call. To give your perspective on that business debt, and I'm going to give you mine in a second.
No, I mean, I find it utterly hilarious, honestly, right? Because a lot of people are talking about getting business funding, aka business credit, but they don't have any revenue in their business at all. And so a lot of times I feel like people are putting the cart before the horse. And I've actually seen clients who's gotten business debt, didn't understand any other terms, don't understand any business terms, like in real life. They didn't understand revenue, sales, profit, loss, all those things, and even taxes. And I mean, I know Jimmy's probably going to clown me on that, but taxes are a real issue when it comes to business in everyday life. But again, I see everybody get funding, but nobody's saying get revenue before you get this funding. And I think it's really dangerous.
No, you're absolutely correct. Like, you're absolutely correct. And that's why a lot of times I make videos online making fun of all the the business funding folks. And I be getting, and the funny thing is, people be like cussing me out in the comments, and then I come to find out later that it's because they're behind in everything they do because they follow this person, and they technically feel bad about it. But you got to be careful out here. Just be careful. Corey, you can say something?
No, I was just saying it makes sense that that the business people who don't have money coming into their business get these business debt cards because they think it's their money. A lot of people don't separate their business from their personal.
Yeah, that's a great point and a great conversation, right? Because you got to be able to separate the two. And the other part about it is Another part is some of y'all be lying on these applications in order to get that. So you're also committing fraud. But
and some of the quote unquote social media gurus are telling y'all to lie on your applications, which is even worse. But go ahead.
One thing you don't have to worry about in terms of us. Like one of the things that we pride ourselves on is integrity, right? So sometimes when you operate with integrity, that slows your growth. But at the end of the day gonna end, and I want to make sure that we can go to bed, understanding that we do nothing but put positive energy out there. So you're never going to hear us tell you commit fraud, right? Shout to Shelby, who says the entire city of Atlanta.
Oh, wow.
Hey Shelby, we got a debate about what are the top 5 scam cities. Like, but it's funny because Atlanta is always at the very top.
Always.
Yeah. So anyway, but the idea. So Champ, shout to Champs in the building. What about acquiring a business? Do you get debt to get the company, right? So that all depends. Is that business that you're acquiring, is it a business that makes money, or is it a business that's just going to cost you money? I think it's an excellent question because part of the thing about enterprise value is, it's used a lot of time in acquiring company because you're not only acquiring the assets, but the debt. How is that debt being used again? So, Forbes is in the building. What's up? Hey, we got a lot of folks checking in. So let's keep it moving though. So that's short and long-term debt and cash and cash equivalents, which are liquid assets which reduce your acquisition costs. One of the things I like about looking at the enterprise value is, and it gets me to pull back a layer and looking at companies to see what kind of cash they keep on hand and cash equivalents. A lot of these valuable companies, they're running a treasury, for lack of a better term. I know Michael Saylor has coined the term like having he has a Bitcoin treasury with MicroStrategy, but other companies do it within the equity markets with bonds and T-bills and all sorts of things. But when you start to pull back the layers in these companies, you realize that some of them, even though they have debt, they can go pay the debt off whenever they feel like it. It's just that they're leveraging as opposed to just holding debt on their books for the sake of holding debt. So let's keep it moving. Market cap versus enterprise value. So the market cap that we talked about last week, it only considers the value of the stock. Enterprise value includes debt and cash for a more accurate valuation. So if you don't remember anything from this class, remember that market cap is the value of the stock. Enterprise value also includes the debt and cash equivalents. It's a crazy sound. I don't know whose sound that is. Like, let me see something.
Yeah, I'll figure it out.
Yeah, about to say mute. Go one by one, muting you guys, because But anyway, but it includes the debt and cash for a more accurate valuation. So nothing else. There you go. I don't know what you did, but you fixed it. Nothing else. Keep that in mind. Includes debt and cash and gives you a better, accurate valuation. So with that being said, here's an example, right? Let's say you have XYZ company. The market cap of that company is 100 billion. How do you go about doing this? You actually add the debt, right? So you go from 100 billion, and debt is 20 billion. So you go from 100 to 120, and then you subtract the cash, which gives you an enterprise value of 110 billion. Why is that the formula, right? You're adding the debt and you're taking away the cash because that cash, can actually pay down that debt, right? So that's why that's the enterprise value. It's 120, right? Minus the 10, which makes it $110 billion enterprise value. That is the value of the enterprise, which is 110 billion in that specific example. So why it matters is it gives you an accurate representation, reflects a company's true worth, right? It's also used in M&A, which is mergers and acquisitions. It determines the acquisition price. It helps to determine the acquisition price. And it gives you a more detailed view than the market cap does alone. And it accounts for capital structure differences. So companies are structured completely different, and they use debt in different ways, and they also use their cash and cash equivalents in different ways. Some companies have a portfolio that will sometimes even become greater than the value of the business that they're running. An example of that was Charlie Munger ran a newspaper. What paper was that, Kamar, if you don't know off the top of your head? I'll tell you in a second. I'll look it up. He ran, what was it? The Daily Journal Corporation, right? So he bought the company, Daily Journal Corporation. And what he was doing was taking the cash flow and, buying assets under the corporation. And he was such an excellent investor that those assets became the true value of the company because it surpassed what they were making. Obviously, news media also dipped as well. But the company still was $1 billion company because the time they were making revenue, he was using that cash to invest. So when you go to look at that company, you have to look at their books to see Is it just what's being generated by the business? Right? So for my real estate investors out there, if you take a portion of your cash flow and you create like a separate little account where you're investing, at some point that account could become worth more than what the actual piece of property is paying off. Me and Kamari were talking about different ways to use cash flow and real estate investing this morning. You know what I mean? Because my brother's a real estate tycoon now, but that's for another video. But
stop the cap.
I'm just listen, man. I'm proud of you, brother. Like that was love right there. That wasn't hate.
That was hate.
No, we bragging on you being the tycoon. You know what I'm saying? Anyway, but I digress. The point I'm making is it's why you have to look at the full books of a company. You have to see not only what are they generating through the company, right? Whether you're selling widgets, whether you're selling whatever you're selling, whether you're renting property, you're selling books, you're selling food, you know what I'm saying? Whether you're selling $40 dates, whether you're selling beverages, whatever you're selling, that's that revenue stream. But what are you doing with that revenue once you make it? And are you taking debt to make that money? And if you are taking debt to make that money, how are you using that debt? All of those things are important. So now, again, real world applications, mergers and acquisitions we always talked about. You can use it in various valuation multiples, right? So you can compare EV to earnings, revenue, and other metrics. And all those metrics we will talk about as we move on with our Sunday church. And when you're doing an analysis, right? So analysts use this and investors use it to come up with the true value of an entity, the true value of an entity, not just what the stock is worth, but what is the true value of that entity. So enterprise value in action, right? So Tesla has a high market cap, but its EV is even higher, right? So Ford and GM, if you look at their valuation, they have a lower market cap, but even lower EV, right? Because they tend to have a lot of debt. Now, just going to give you a couple of things I looked at earlier to show you how the market cap and EV differentiate itself, right? Let me see. Hold on one second. Here we go right here. So here's the company, right? Alphabet, Google. And by the way, this is in billions, right? So you look at their market cap, they're a $2 trillion company, but their enterprise value is, $2.1 trillion. Market cap is $2.2 trillion. So Tesla has $1 trillion company, 1.3 trillion, but their enterprise value is actually 1.4. Berkshire is very close, in terms of their market cap versus enterprise value because they're a holding company. Then you have Ford, then you have Apple, right? Which is like, and that this is like as of this morning, so this is Apple, which is like, literally spot on. And then Microsoft has a higher enterprise value as well. The point is these numbers tend to be different for the most part. If you go up and down the market, if you look at the Fortune 500, they tend to be different. But yeah, so by the way, speaking of the Fortune 500, I heard something crazy yesterday as I was reading the finance news, Kamar. This is a sidebar, but you always get sidebars when you listen to the Black Wealth Rebels. They said Mr. Beast is in business with 66 of the Fortune 500 companies.
That's crazy.
That's insane. Yo, that's insane, bro. That's more than 10%. All right, but I digress. It's not I'm not trying to glaze Mr. Beast, but I was reading that in the finance news and I said, damn. Anyway, so the conclusions and key takeaways. This gives you an accurate valuation because it includes the debt and the cash. It's used for mergers and acquisitions, so it's critical for financial decision making, and it gives you a way to analyze based on EV. Now, I like to simplify things. I always look at this as people, right? If you have cousins or family members and you're trying to do business with them, it's one thing to know how much money they have in the bank, but I want to know your overall financial picture. How much debt are you carrying? What are your obligations? What are some of the things you have, right? I want to know your enterprise value as a human being. And I think that's important too, as you get into business with people, understand everything that they got going on. And sometimes family will come to you to ask you to borrow money, right? And all of us know, and it's not just me, I could say this without hesitation, that all of us have a family member that'll ask you for a couple of dollars and you'll give it to them within a heartbeat. And we also know that family member that'll ask you and you won't give it to them regardless of what's going on, right? Is that just me or y'all got folks like that too, Corey?
Man, listen, that I don't even want to talk about how much money I gave the family. And they be like, I'll gladly give you what's the name for a hamburger today. I'll gladly give you money on Tuesday for a hamburger today. And for sure, on Tuesday, they was coming to ask me for another hamburger without my cake. You know what I mean? Without my money. You know what I mean?
So that is the point that I'm making, right? The point that I'm making is the thing about enterprise value, and I try to bring it to something that's relatable, is it goes beyond just one thing, right? It takes a deeper dive. And even when you talk about like family, sometimes you gotta take a deeper dive, right? When you go to buy a house or when you go to buy a car, they get all in your business, right? Because for all intents and purposes, the bank is your partner in that endeavor. So they get all in your business. They want to know your enterprise value, right? Because the way I look at it is the way my brain works. I see all of us as having an enterprise value, right? He shot the Wimpy here. For those that caught the reference, I caught the reference. You know what I'm saying? Wimpy was about the hamburger life. You know what I'm saying? Yeah,
Wimpy was terrible with finances.
Yeah. That's an excellent point, Corey. We got to do an analysis on Wimpy because Wimpy was bad with his money. He was absolutely terrible with his money. And that was a lesson they were giving us when we were kids, and we didn't pick up on the lesson. Don't be Wimpy, because Wimpy had a bad enterprise value, right? Because Wimpy got his bread on Tuesday. You know what I'm saying? But Wimpy always was in debt. So no matter how much money you make, you can be in debt. There's a number of companies on the market that make billions of dollars, but they run billions of dollars in debt. So what is their true value, right? Are they actually getting ahead? If I run a business, right? Let's say I own a little convenience store, right? And I tell you that my business is generating $10 million a year. You say, man, Jimmy got a $10 billion store. But what I don't tell you is my business cost me $12 billion to run.
I can give you a real life example. I used to own a bar. Jimmy, you've been to the bar that I used to own.
Yeah.
Right. And we would make $25,000, $30,000 a week. Right? Sounds amazing, right? Until you think that we would spend at least $20,000 a week.
Listen, I can give you another personal example. At the most properties I had over 60 properties at one point, and I was on this mission to get 100 doors, and I had like over 60. I think it was like 65, 66, somewhere around there. And I sat down one day on my nerd joint, put all the numbers in my spreadsheet, and I was making less money than some folks working fast food because I had so much debt. So I went on a mission to sell the properties off, keep the best assets. And, life has been better ever since because it wasn't just about scaling that way. It's about being smart with money. So that's why a lot of times when I talk to investors, specifically in the real estate space, I tell them it's not about how many doors you have. It's about how much money you make. Because a lot of times we get caught up in our ego, and our ego tells you more and more and more, but are you really making money? You know what I mean? So, it's the same thing applies to big businesses. So as we're looking on the stock market to buy big businesses, always look at how much debt they carry. What are they doing with that debt? Now they're able to take the debt and make more money with it. That's cool. Apple does that. Apple has debt, but Apple makes a ton of money, and Apple uses debt to make more money. So it's not about having debt and debt being bad. It's about what are you doing with the debt. Go ahead, come on.
Google. There's a bunch of companies exactly what Jimmy's talking about. And Jimmy, you touched on this earlier. YouTube. Oh God. Jimmy's just wild, y'all. But I don't know if y'all picked that up or not yet. But you can become your own bank. You can become your own. I don't know what would you call it, Jimmy?
I get what you're saying, but the internet has ruined that phrase of be your own bank. They ran that into the ground. I just say be your own financial institution, right? So, be your own enterprise, right? Have your own enterprise value.
And so, Jimmy brought it up earlier when we were talking about real estate. You can do that with your check. I know people that have way more money in the stock market that generate dividends than their salary. And so that's saying something. But you got to be strategic about it. You got to be disciplined about it, and you got to be consistent with it. Or just imagine if you take as little as $25 out of every paycheck, create a brokerage account, and buy. Jimmy talks about Top T often. We can talk about the Dividend Kings ETF and just buy that. By the way, this is not investment advice, y'all. Well, where's the banner at? Before we get
by the way, anything we say here is not investment advice. It's for educational, informational purposes only. We are not your fiduciaries. You're not here to tell you to do anything. But I can speak from experience in terms of what Kamari just said. One of my most valuable accounts that I have. Every 2 weeks since 1997, I've been putting money in the S&P 500, and I haven't touched it ever. And right now is one of the most valuable accounts that I have, and I still do it to this day. In the words of our beloved brother,
To this
till this day, Deontay Wilder.
Yeah.
Till this day,
I
right?
appreciate that, brother, but he needs to retire, man.
Yeah, he bugging. But what I'm saying is, I don't even look at it. I do know that, I don't even want to tell you what it's worth because I ain't trying to end up in nobody's trunk. But at the end of the day, what Kamari said is absolutely true. But that's over a long period of time, right?
Correct.
I
think a lot of times everybody is so conditioned for big lump sums. Everybody has a lottery mentality. And I said this years ago. We have a lottery mentality because a lot of times we have a drug dealer's mentality. And that's been so prevalent in our I said that before, Jimmy. This is nothing new.
No, I know it's not nothing new, but I was just thinking about it because it's true. I go on Instagram and it's like I watch these pages, and there's no disrespect to folks that run the pages because you're running a business, but they got all these like street legend pages, this street legend from that city or the street legend from that city, and like, what such and such did. And I be reading it, and I always read it, right? Because I'm always waiting to see like what that person's doing now. And it's always like, RIP, you had to run from 87 to 89, and now you're dead and your family's broke. And it's like, in the words of Styles P, man, I'm tired of hearing about old Libyans that had it. Be the same. All right, anyway. All right, but no rest though. I'm not, no locks bars this morning. But the point is this:
bars, always locks bars. But why do you bring that up though? But go ahead, Jimmy.
No, that goes to your point about the mentality, right?
Right.
I want to have a builder's mentality when you build things over a long period of time. When you look at a lot of these large institutions that exist specifically in finance, like, right, even some of them were built on the backs of slaves, and that's a whole other show. But you look at something like a Wells Fargo. Wells Fargo is one of the biggest businesses in the world. But how long has Wells Fargo been in business? It's actually on their logos from 18, whatever it may be, right? When you have a builder's mentality, you're less selfish because you're not thinking about yourself. I've had conversations with people on consultations where they say, this is all good and I'm building money. When I'm going to get to spend it? And I'm like, well, your mentality is messed up, right? Because we're talking about nation building. We're talking about institution building, right? So when you talk about that, you have to have a long-term perspective. It's something that I'm actually working on a video now, which is, time preference, right? Because when you start to build and you're building long-term, what you realize is the value isn't even in the asset. The value is in the journey and the person you become through that journey. But I'm sounding real church-like now. So let me chill for a second. Go ahead, Mark.
No, but listen, everybody talks about Buffett, but nobody ever talks about Buffett's strategy. Buffett's strategy is to buy a piece of stock and hold it forever. His plan is usually never to sell. Does he sell? Sometimes, absolutely yes. But that's not the original plan. The plan is to hold it indefinitely. And so he's not thinking about get rich quick. He's not thinking about hot stock tips. He's thinking about what are vast assets that are undervalued, where I can put money into it and get more money out of it over the long term. Not tomorrow, not next week, not next month, and not even next year. But by the way, want to give love to JT. JT done dropped 2 super chats today.
JT, salute.
Thank you.
Yeah,
it's a marathon, not a sprint. Shout out to Nipsey.
That's why people stay away from real estate, because it takes a long-term mindset to achieve success.
Yep.
Or they get in with that mentality and they try to run a strategy where they keep borrowing from a property and end up underwater. So sometimes, like, not having that long-term mind frame, like, it's funny. I was just explaining to Kamari. Actually, I'm jumping off here in about 20 minutes. I got a tenant moving into a property earlier, right? And I was explaining to Kamari how I had a tenant move out, and it was actually a blessing because I'm able to get more cash flow with the new tenant, right? But the fact of the matter is, I already know I'm not touching a penny of that. That's going all back into the business, right? Because it's a builder's mentality. It's what I talk about every week on Stack Sats or Die Trying. It's about your mentality. Are you a builder or are you a hustler, right? And, and Kamari talked about the drug dealer mentality. And I even find that funny because certain folks were drug dealers and certain folks are hustlers. If you're a hustler, you can hustle anything. Correct. If you're a drug dealer, you can't even sell drugs. So it's a difference. So, but when you're a builder, I think a builder is, where we should be focusing on building. And I'm talking about building individually, but also building together. Let the church say amen.
Hallelujah.
Shout out to the folks listening to us this morning, speaking in tongues in the chat. You know, it is what it is. All right. Well, Anthony says Wells Fargo was around the same time as Gunsmoke and Bonanza. Yeah, absolutely. They was on wagons, right? The Wells Fargo logo got them on wagons. Wells Fargo was like, you know, we could talk about how some of those companies made their money, but it's an interesting story when you look at the history of Wells Fargo.
Not only how they made their money in the past and how they're still doing fuck shit to this day, but to this very day. Shout out to the Browns bomber.
Listen, I have a Wells Fargo account. I don't really use it often, but I keep it open. I'm gonna tell y'all, this is absolutely true. And Corey attested to this. I've said it several times. I get multiple checks from Wells Fargo every year for something nefarious. Something nefarious they did, and they got a class action lawsuit. So everybody who has an account gets money. And I literally get it's almost like an annual thing.
I gotta check that out.
And also,
get a dividend check from Wells Fargo because
I get a check from Wells Fargo like every quarter, dog. And it's like it's always because they got sued for doing something crazy. And what occurred to me that I heard someone on CNBC said that Wells Fargo is so huge that it's almost the cost of doing business at this point. Like, yo, we're gonna run this crazy play, but we already know we're gonna have to pay out. But we're gonna make so much money that we can pay this out and still be a net positive, right? So I literally have an account that I've had forever. And it wasn't even originally a Wells Fargo account. So I'm gonna tell y'all, I'm gonna age myself. Like my dad set this up as a GSB account.
Wow. I don't
yeah. Germantown Savings Bank. Yeah.
Wow.
Look at my pop. He was trying to teach me the game. He from what he knew, but he set me up a bank account. Right? You know what I mean? Back at GSB. And I've had it since then. You know, so on my card, like it literally has like my birth year. Like it's been a customer since this is the year I was born, which is crazy, right? But yeah, I've been a customer since then because that bank got bought by that bank. I think GSB got bought by Core States, maybe, or then it's Wachovia. Then anyway, went through the chain. It ended up Wells Fargo, but the point I'm making is Wells Fargo is such a big institution that they literally have fraud that's part of doing business.
Well, to be fair, all major S&P 500 companies do the same thing. They will.
I'm not sending shots at them at this point. Like, if you're the CEO of Wells Fargo,
so
yeah. If you're the CEO of Wells Fargo, you have no idea that you got somebody on like Fifth and Erie opening up fake accounts. Like, you know what I'm saying? Like, some of the stuff they got hit for was crazy. Where folks was making up accounts for folks that didn't exist. You know what I mean? Like they have all kinds of stuff, mortgage stuff, but they tend to get hit. And, and salute to them though, because, I take all those checks and then put it right back into the streets. So Shelby says he got a very big class action joint from a few years back. Yeah, I did too, dog. I got a joint that was damn near a stack. And I was like, ooh, let's get it. You know what I'm saying? Got me a nice ribeye and put the rest in the market.
Young ribeye spit strikes again.
Listen, man, I had an amazing piece of New York strip yesterday, dog. I ain't gonna lie to you. I was at River Falls, you know what I'm saying, our place.
Shout out to black businesses.
Shout out to black businesses, man. Shout out to River Falls, the whole family over at River Falls, man. They used to see me now. That's in the neighborhood. So I was in there yesterday. I had an amazing New York strip,
Jimmy's
so
trying to infiltrate.
Huh?
Jimmy's trying to infiltrate.
Shelby said he got one for $18K. Yeah, so Shelby got one for $18K, which was part of a class action. Imagine how much they paid out total.
Something major.
The question is, what is Wells Fargo's market cap and enterprise value? Can anyone tell? Since we're gonna stay on topic, I'm gonna pull that up right now. If nobody puts it in the chat ahead of me, what is their enterprise value and market cap? The WFC is the ticker symbol, by the way, for those who don't know. Let's look at their financials here. They have a market cap of $254.89 billion.
Correct. And their EV value is 103. That tells you a lot.
Let's see. I didn't get to that. What's the enterprise value?
103 billion.
Okay. Yeah.
A lot of debt.
A lot of debt. Now, let me give you something else that I know is going to be wild. Let's look up RA, or did they even publicly trade no more? I think they got kicked off the market. No, they got kicked off the market.
Who's that?
I was trying to look up Rite Aid.
Yeah, I think Rite Aid is gone.
Yeah, they got kicked off the market. I was bringing it up because I was following them for years, and I used to always look at their debt and be like, flabbergasted. Like, how do you hold that much debt? Like,
The son took over, and he was trying to expand. I actually bought some Rite Aid years ago. Want to bounce and let it go.
I bought some Rite Aid a minute ago. I told y'all my story before. I bought Rite Aid when I saw Ed Rendell buying Rite Aid because I was on that type time, right? And then when they didn't get the license to do the liquor, because I thought, again, I'm always watching what folks are doing. And for those who know who Ed Rendell is, look him up. Political legend in our area. But I saw he got a board seat. I saw they was trying to get a liquor license. I was like, all right, he got the political pool. They about to run a Boston out here, right? Didn't work out though. They politically it didn't work out, so they didn't get it. But I digress. But I used to always watch the company just because they carried so much debt, and I'm like, what's going on? But I say all that to say that if you want to keep it simple, man, we know people that carry too much debt. The same thing applies with companies. That's the great thing about the stock market when you really break it down to its basics is not that complicated. They tend to try to make things complicated through like vocabulary and coming up with these ridiculous strategies that at the end of the day don't work. It's one of the reasons why I love reading like Buffett and Munger, right? And everybody loves reading Buffett and Munger. But one of the things that I like about Charlie Munger specifically is he is really, if you read his writings, right? And although we disagree on a lot of things, the one thing I appreciate about his writings is he loves to keep things simple. And he talks about how a lot of these metrics people use, but they just tend to overcomplicate things. Like EBITDA. He hates EBITDA. He thought it was stupid. Didn't make any sense, right? Earnings before interest tax, that's what EBITDA is. But the point I'm making is they tend to overcomplicate things. And I think a lot of times that keeps certain people out of investing and out of the market. And our job as the Black Wealth Rebels is to make sure specifically our community, our investors, we know how to trade. Even if you don't want to trade, you know how to trade. You are an investor. You're interested in buying land. You're interested in buying businesses. You know what I mean? We got to start talking more about that. We can buy some small businesses. We can, work together.
Asset ownership is the key to all of it, right? No matter it's Bitcoin, businesses, stock market, real estate, whatever it is, it all boils down to ownership. So
listen, man, I had a hashtag I used to use, you know what I'm saying, which was hashtag own some shit. And that was my whole wave. Own something, I should say something because some of y'all may take that too far and start trying to own people, because it's happened in our history, but I digress.
Facts. Wait a minute. I got to give you the horns for that, Jimmy.
Horns. Don DeMarco, Marco. All right, listen. Shout to Don again because Don, I'm still making my way through that book. But that's one of the things about the book that I find interesting that they talk about how they literally used to value slaves in terms of its ability to produce income. It was almost like they were doing a full analysis the way we do a stock, but they were doing with human life, which is crazy. But they would literally use metrics. It's like, this is crazy. Like we all know how ridiculous and how crazy that was. But when you hear them about the metrics they would use, it's like, yeah, really, really wild, man. Really wild. Anyway, man, so that's what I have about enterprise value. I hope you guys have gotten some value from our presentation on enterprise value. Again, every week we're going to talk about a key metric, something that's used, how we can use it, how to simplify it, because I think that's the objective is to kind of like, keep it simple, the KISS method. Yeah, so anyway, with that being said, that is enterprise value. Salute to everybody in the chat. You know what I mean? But yeah, man. So, and by the way, for those who don't know what I'm talking about, our brother Don Johnson have recommended a book. It's called Plunder. And the book is phenomenal. I've been reading it all week. I'll probably be done the whole book next week because that's what I'm on right now. But it's one of them ones. I got to put it up there with like The Color of Law, The Color of Money. All the books that kind of talk about systems. Cast is a big one. What's Michelle Alexander's book? Yeah, so it's a number of books that talk about systems, right? There's an underrated book that I always talk about called Family Properties. That's phenomenal because it gives like real life stories about how some of those things were played out in zoning laws and the real estate market. It's by Beryl Satter. So we always give book recommendations, but Don put us onto this book, and it's been a pleasure to read, and I'm learning a lot and taking notes. Corey once told me that, and Corey told us all. He said how he determines whether a book is good or whether you actually read a book is if you got notes, right?
So let me give
I
myself.
don't know if I 100% agree with it, but the point is, Corey, I got notes, so it passes the Corey test. Do you got notes?
Real quick,
like I'm saying, that's how I used to. Again, as a teacher, as someone who has been in education, if you didn't take notes, I don't think that you fully understand what you read, because you can't go back to it. Like for me, that's what I used to make my son do. So for those of y'all don't know, I homeschooled my kids, and so if it wasn't no notes, you could tell me anything. You know what I mean? You could tell me you read it, or you could show me you read it. If you can't show me you read it, then I don't believe the words you're saying. You know what I mean? You can tell me or you can show me.
But real quick, let me correct myself. I said the 13th Amendment. Michelle Alexander's book is The New Jim Crow.
The New Jim Crow, yes, that's it. That's it.
The New Jim Crow. However, the 13th Amendment documentary by Ava DuVernay was based on that work. So that's fine. Okay.
So Corey, I know I agree with you, but if I'm listening to a book or reading a book about what's his name? His name was Ricky Santiago, moving work so Winter Santiago could have better clothes. Like I don't know if I need notes on that, right? And that's the coolest one.
I mean, but if you read for entertainment, that's something totally different than the read for.
Yeah, I'm saying
if you read for information,
hold on,
I personally think you should be taking notes if you're reading for information.
Real quick, JT, do us a favor. Take a picture of that, share it to our stories, and tag Black Wolf Rebels on IJ, please. Help us out.
There we go. Yo, so here's what I'll say, right? I read a lot of fiction too. You know what I'm saying? Like Harry Potter, for instance. I ain't got no notes, but although it's funny though, because my brain is so trained now that even when I read crazy fiction books like that, I'm always looking at it through the lens of like say Bitcoin or finance. I'm in land, by the way.
I look at it through racism, so I can't read Harry Potter. Sorry. Nor Rich Dad Poor Dad.
I mean, so does the Wall Street Journal, so does Yahoo Finance, so does Bloomberg. I mean, you might as well stop reading, beloved.
No, it's different. That's different.
I mean, if you say so, you want to make it different, you make it different.
Different.
You like it, I love it.
Okay.
You know what I'm saying? But supremacy permeates throughout all media. Also want to say one thing too, though. I don't know if you guys saw this, but last night, the Wayans family got honored, and I thought that was like phenomenal. And I also thought their acceptance speech at the NAACP Awards was amazing because it was all about them honoring their brother, Keenan, who was who put the whole play together.
Is the GOAT.
And as I was watching that, man, I was damn near brought to tears because it's like they tell the story of how Keenan got, worked his way to do what he did, but his whole thing was about putting everybody on. And I feel like if Keenan doesn't get the credit he deserves. So I just want to bring that up. We talk about wealth.
I think the Black Wealth Blueprint, the Black Wealth Award should go to the Wayans family, especially Keenan. And they don't. I agree with you. I mean, they don't get enough credit.
Yeah. So the Broke Genius says, I'm good. Thanks for asking at JT Coinrings. Part of real estate is making money off of white flight. Interesting. Got to think about that. So, I mean, if that's your strategy. One of the things I love about real estate, and me and Kamar have had these talks recently, is he's become a land tycoon. Is there are so many ways.
Oh, slander.
That's not slander. That's love, man. Listen, man, you a tycoon now, man. Accept your tycoonism, man. You know what I'm saying? Kamari got multiple doors. And listen, Kamari, listen. I know a lot of folks that own real estate.
This is on cool, but go ahead, Jimmy.
No. Listen, I know a lot of folks that own real estate, right? My brother owns commercial property. It's a difference between, you know what I'm saying? My brother owns commercial property. You know what I'm saying? That's a black man right there that owns commercial property. So I'm actually proud of my brother.
Shout out to my dad. He was ahead of his time. That's all I got to say.
Listen, get that. It comes from Pops, but guess what? We talk about black wealth. What's bigger black wealth than your father leaving you commercial and residential property, right? That is what we talk about. We talk about legacy. We talk about black wealth. this is what you stepped into based upon the work he put in. And guess what? The idea is for you to take it, and what are your kids going to step into?
Not just my kids, but also the community as well. But
yeah,
I think, I mean, I'll be honest, I'm more excited about the stock than I am the real estate, but it's cool. I get it.
But it's all part of it, right? When we talk about the builder's mentality, I told you again that the more I learn about your father, the more impressed I am, because your father was a black man in the 70s buying buildings and buying stock.
Correct.
I don't know. Listen, I'm talking about my personal family, even my neighborhood. Like, I knew some people that own real estate, which is why a lot of us got into real estate, but I didn't know too many folks in my neighborhood that were on stock in the 70s. I wasn't born then, but even when I talked to my OGs and old heads, they knew about the real estate game. They weren't hip to stock.
And so, remember we talked about General Dynamics and the defense sector, which we talked about last week, which is getting mollywopped because of all these Trump cuts. I actually found the stock certificates, and so we got to do a show around that.
Oh yeah, that's dope. That's dope. That's dope. Yeah. Listen, banks look at you differently when you own commercial and industrial. They do. Listen, banks look at you different when you own apartment buildings, because it's a different class of property. It's a whole different rules. Like, I owned an apartment building. I had to go through a bunch of stuff. And when I went to the bank, it was like, they meet you at the door. You know what I'm saying? Like, what time you coming? Because I'm going to meet you at the door.
Correct. But that's because of the potential cash flow that's projected with those properties or attached to those properties.
Yeah, because guess what? They want you to take that potential cash flow and park it under their roof so that they can leverage it up and do what they do. But, that's how banks work.
That's a fact. That's a fact.
Also, what banks look at you different. I was having this conversation with a fellow investor yesterday, one of my clients who owns a lot of real estate. And we were talking, and he was talking about using blanket mortgages, right? So even though he owns individual single-family homes, he was putting them all under like various blankets. And again, this is not investment advice, but it's something he was telling me. He was saying, so if I own 25 properties, right, and I put it under one blanket, and I walk into the building with like a blanket with 25, potential buildings that have cash flow, that's also a way to get the banks to look at you a little bit different. Yep. You know what I'm saying?
That's a fact.
So it's another strategy that way.
And I mean, but tying all this in back with enterprise value, right? Like we said, own some stuff. The thing about it is, when you own some stuff, you could also use that stuff as collateral to get bank relationships or bank financing. So it's multiple reasons that have ownership in assets, y'all.
Yeah, and then you get to the next level and you create your own bank, such as we do at IB Big. Although it's not a bank, it's an investment club. But what I'm saying is you create your own enterprises that can, leverage our time, our talents, and our resources for the community. And shout out to everybody who's a member of our investment club. I tell you guys every week is ibbig.net if you're interested in that, because when we live our raps, right? So we're doing a cash mob March 8th. We have an investment club. So everything we talk about, we're actually doing. I'm working in real estate. I'm on my way to a property in the next 20 minutes, right? Kamari is in taxes. Corey is in education. So, you couldn't talk about it if you ain't living.
Right. We all own stock.
Do all the things. Have your own enterprise value. When you look at your husband or wife later, talk about your family value. I was working on a presentation last night for a talk that I'm doing in Ohio. By the way, I'll be in Columbus, Ohio, March 3rd through the 8th. Anybody in Ohio, let's get together, get a grub. But I'll be in Ohio. So I'm doing a talk in Ohio. And me and my wife were working on this presentation. And I was talking about mission and vision statements of a company, because companies have mission and vision and value statements. And I asked her, I said, as a family, what is our mission and vision statement, right? So your family should have a mission and vision statement. It's just a conversation I'm just bringing to the village, because I think this is interesting, because we talk about building, and we talk about building with each other as a community, but also as your family. So when we talk about enterprise value, what is the enterprise value of your family and your household? And what is your mission and your vision statement of your family? So I'm gonna leave y'all with that. I'm not asking for answers, but what you think about that, Kamari?
No, I love it.
What's your immediate family? What's your mission and vision statement? Do you have one?
To leave more wealth than I got.
That's a simple one, but I like it.
Now, listen, I do believe in KISS, right? Keep it short and sweet. Keep it. What's the other one? Keep it simple, stupid.
Yeah.
I like the one. Keep it short and sweet. I like that one better. I'm not really into bloviating.
Yeah,
but like keep it short and sweet, right? So
I gotta send you this video. our brother, well, at the time he was called Stokely Carmichael, but he had a whole talk about Kwame Ture. Someone had criticized him. They were not criticized. They were asking him a question. They were talking about how he doesn't use big words or these different things that these other academics use. He went off on this whole like beautiful tirade about what you're saying.
Yeah. So I mean, but for me, and I mean, I should start talking to my family. And I got this from a book called Atlas Shrugged. There's a character in the book. By the way, it's one of my favorite books. But not for the reasons the Republicans love it. But there's a character in the book who got generational wealth, and he says his job is to multiply what he gets for the next generation. And so I want to be a multiplier of assets for my family.
There you go. Ayn Rand is the author of that book, by the way. That's a classic. Corey, have you ever thought about a mission, a vision for your family?
Yeah. The mission is to build something.
So by the way, I want to explain this too, because this is like from a text. Like a mission statement is literally what you do day in and day out. Your vision is what you hope to accomplish, or what the goals are. That's kind of the difference between mission and vision.
The dream.
The mission is to educate, and the goal is to educate to keep whatever we build forever. So that's the mission and the goal.
All right. So with that being said, I ain't got nothing else, man. I want y'all guys to think about that. Something I'm leaving y'all with. We'll be back on Wednesday. Go ahead, man. What's
your mission and vision for your family?
All right. So my mission statement, what I do day in and day out, is I stack sats or I die trying. My vision statement is similar to yours, is to not just leave assets, but leave values to the next generation. Because I think that values are just important as assets. Because one of the things I'll tell you, and I was thinking about this the other day, right? Through life, you have family, you have friends that you start with, and you go through different parts of your life. And one of the things that I'm most blessed about is the people that I spend time with in 2025, as I curate my life, are people that move with integrity. And I think that's just as valuable as any asset there is, any piece of property there is integrity. The reason that you see me with Corey and Kamari are because I believe those brothers have integrity, and it's not about cash doesn't come first, community comes first. And I've had opportunities to work with a lot of people, to do a lot of things, and I turn it down because if I feel like a person doesn't move with integrity, you won't see me with them. It's one of the reasons why Corey and I literally stopped doing interviews on our podcast, because we would meet people, do interviews, and then as we would start to learn or meet or build relationships with people, you realize that they're not the same as us. To quote Kendrick Lamar. To quote Kendrick, they're not like us. But I mean literally, like, because for us, community comes first. It's not just about flashiness or just having money. So when I talk about the vision is not just from an asset standpoint, but from a value standpoint. And I'm gonna drop the mic right there.
No. But I want to say something about Jimmy. Real quick. Jimmy coined a term that technically we all are affiliated with. Our gang is the Clean Glass Gang.
I can't take credit for that. My father used to tell me that as a kid, and I didn't realize until I got older that I think my father stole that from Elijah Muhammad. But my father used to always tell me that as a kid. So that's my pop's bar.
Right, but so if you're familiar with the Malcolm X movie where Elijah Muhammad says, "Be the clean glass," when you're able to stand up to all the dirt and filth that's floating in the dirty water, you want to be the clean glass. Jimmy, for us, I feel, coined that term. So that's our mission, right?
Our vision is to be the clean glass gang as it pertains to black wealth. And I want to shout my pop, because my pop used to tell me that as a kid all the time. You ever had your old head or your pop or your mom or your grandma, whoever it may be, tell you stuff, and at the time they're telling you it doesn't click, and then it clicks when you get older. And I remember watching the movie and he was, what I'm saying? But he used to read, the writings of Elijah Muhammad. So, but I got to cite the source. So Pops put me on to that when I was probably too young to even know what it meant.
Shout out to Pops. That was dope.
No, listen. I come from a village. So to me, when we call our folks the village, that has value too. We mean that because that's what we come from, right? All of us are standing on the shoulders of other folks. Like me and Corey had long conversations about what our grandmothers meant to us. Kamari's father, we've been talking recently, with him transitioning about what the values that he left Kamari, and he left you values and assets. So your pop already lived my vision statement. So
how do we form with like Voltron and do that and multiply that? Because that's how
Black Wealth Rebels, and that's why Black Wealth Rebels is important. So everybody join our village at blackwealthrebels.com, because that's what we're doing as an entity and what we're trying to have. And also shout out to Cedric, who just sent me an email. Cedric, I want you to know I got your email. We will jump on the call this week because Cedric's in the village and he sent me an email. So salute to Cedric. Yeah, man. Shout out to our brother Jabbar. Jabbar, I gotta call you today. I gotta get to 11:30, man. But I gotta talk to you, Bar, about some real estate. Outside of that, man, this has been a that's my origin story. My parents met in a mosque, in Marion in Chicago in the late 70s, the Broke Genius. Listen, I said before, my father was a member of the Nation of Islam, and that's why my feelings about Black wealth, that's a part of it. I had a whole village. So I'm not going to say just my father, but grandfather, grandmother, aunts, uncles. and to this day, I got aunts that don't play about me, dog. I got an aunt, last week just sent me a message like, anybody got a heart? Like, listen, I got folks that don't play about me. So village is what it is, man. We start talking about enterprise value and we end up talking about community value. And the reason I bring that up is because all of us have an enterprise value, individually, collectively, and so do these companies.
Well, nothing much to say after that. So we'll be back in a couple hours behind the wall, y'all. So we're going to talk about these plays of the week.
Yes.
We'll see y'all then.
All right, peace. Black Queens forever.
Come on, man. The whole thing if you're going to say it.
Hey, listen, they already know how I feel, man. You already know how I feel. You know what I mean? Listen.
All right, y'all. Till next Sunday. Y'all be great.
Love y'all. Peace.